All right, for more on all of this, let's go to Bloomberg's equities reporter, Stephanie Hughes. She joins us now to talk about what's been going on. Stephanie, let's start with the positive, the little bit of positive we have on a dismal day. Dollarama bucked the trend. How well did they do last quarter?
Yeah, so Dollarama was probably one of the few bright spots on the TSX today, Marella, and that stock hit an all-time high as shares gained by over 9% at its peak today. And the discount retailers' adjusted earnings and revenue in the fourth quarter came ahead of what analysts were expecting. Not only that, but they also boosted their dividend by about 15%. So this was all being well received by the analyst community. We had TD Cowen analyst Brian Morrison saying that Dollarama was shining bright in economic uncertainty. So that's some nice words to be said about Dollarama there. He also called the company a key holding in this environment, given its value proposition, which he said has been magnified in the challenging economy. That said, the 2026 forecast was between either being in line or slightly below expectations, depending on which analyst team you're reading off of there. But the issue there is that they're expected to contend with a slower consumer spending environment as tariff uncertainties kind of continue there. So on the conference call this morning, CEO Neil Rossi said that the counter tariffs would impact a portion of goods that they import from the U.S., which he said is not an inconsequential impact, but it is a manageable one.
Okay.
So Rossi added that Dollarama has tools to navigate this trade war, like product substitutions and price adjustments if necessary. So ultimately, the challenges to the consumer confidence will be the major challenge for Dollarama and other Canadian companies. But Dollarama has been handling it well so far year to date, Marella.
Okay, so that is positive for Dollarama. But let's talk about Aritzia. It got dragged down today in this post-Liberation Day dive. What happened with them? Why are they going down so much?
So Aritzia, it does have a lot of business in the U.S. there. So what happened with Aritzia today after Liberation Day, as we're calling it, or as Trump is calling it, Aritzia wiped out over half a year's worth of gains after it fell by nearly 24% today. It was also the biggest stock drop or drop to its intraday stock price since July 2023. And it really comes down to tariffs, as the levies have been really punitive on retailers that sold their goods to the U.S., according to some analysis by TD Cowen. So going back to more analysis from Brian Morrison, he said that the team was expecting names like Aritzia to have some tariff exposure and that it should be manageable as far as price increases go. Aritzia is obviously also grappling with a slower consumer spending environment as people are pulling back on discretionary spending and focusing more on essentials. So obviously in this environment, people aren't going to spend as much to fill their closets as they're more concerned about filling up their cupboards, Marilla.
Absolutely, and it could be tougher times ahead, as you mentioned. All right, Bloomberg's equities reporter Stephanie Hughes, thanks for that.